Hey everybody, welcome back to Dividend Stockpile, and welcome to your Daily Dividend News, your daily dividend fix with just a hint of sarcasm. Today is August 27th, 2025, and we have lots to talk about today, so stay tuned. Alright, so first up we have news about Rexford Industrial Realty, which is a industrial REIT. They got a bump in their stock price today because it was on a report that Elliott Investment Management has taken a stake in the company. It's probably a good thing because Rexford has definitely not done really well over the last year or so, but it is rising almost 5% today after the announcement of the interest from Elliott Investment Management. So it's an industrial REIT. It competes with other industrial REITs such as Prologis and East Group Properties, and it hasn't done very well this year. It looks like it's gone down 17.4% over the past year, and that's much lower than a lot of the REITs in general, which according to this article is about 2.4%. Looking at their stock chart, you can look at the comparison between EGP, which is East Group Properties, another industrial REIT, and Rexford. You can see that they've had a much worse year, so it makes sense that Elliott Investment Management might want to take a stake to see if they can increase any of the value or profitability in the company. So if you're a shareholder of Rexford, you saw a little bump today, and hopefully whatever the activist investment team wants to do is a net benefit for shareholders. Okay, next up is Williams-Sonoma announced earnings this morning, and just for disclosure, this is one of the stocks in my quality dividend portfolio. I mentioned them on yesterday's episode saying that the new tariffs that are going to be coming around regarding furniture might hurt Williams-Sonoma, but looking at the report for today, it looks like they're doing really well so far. They didn't mention the tariffs and the announcement, so we'll talk about that in a second. So it says second quarter comparable brand revenue is up 3.7%, margin of 17.9%, which isn't expanding, and a diluted earnings per share of $2. So that beat the estimate, and they also raised their estimates for net revenue in the future for the rest of this year. And they had diluted earnings per share growth of 19.8%. So Williams-Sonoma overall is doing really well. A lot of the gains that they got is comp growth. So you see that it's 3.7% comp growth year over year. And that's pretty strong for a retailer, especially a luxury retailer in the environment that we're in today. And I love the high operating margin and the earnings growth of nearly 20%. So that being said, they did talk about some of the tariffs. I'm going to scroll down here. And so they are raising their fiscal 2025 guidance, but they do expect the higher cost of tariffs to start hitting their revenues. So it says here, we expect that incremental flow through our higher net revenues will be pressured by incremental tariff costs. These costs include additional tariffs on China of 30%, India at 50%, and Vietnam at 20%, and the rest of the world average of 18%. So there's a lot of things working against Williams-Sonoma when it comes to their suppliers. Hopefully they'll be able to find alternatives, but that might drag on their revenues and their profit margins going forward. So far, so good. The market doesn't seem to be reacting too poorly about the forward guidance. Williams-Sonoma is only down maybe 0.5% today, which is really not much of an issue at all. Okay, so moving on. Coca-Cola. Man, what a disappointment here. It says Coca-Cola may unwind Costa coffee at a big markdown. So if you remember, quite a few years back, I think it was 2018, Coca-Cola made this big announcement that they're buying a coffee company, Costa Coffee. Everyone was super excited. They're saying, oh, look at the synergies that we can have. People are going to have Coca-Cola and coffee combined. You know, it's expanding beyond the soda market for Coca-Cola. You know, coffee is drank throughout the world and it's a little bit healthier, so people are really going to love this. Well, apparently not so much. So they're indicating that they might sell the company for about half of what they purchased it for. So it says they bought it in 2018 for $4.9 billion, and they're looking to sell it to private equity for about $2.7 billion. Talk about a hit. They need a little bit of jolt of caffeine to get that to make sense. So it's really unfortunate. You know, Coca-Cola is a well-known brand, but it looks like they misstepped on this Costa Coffee acquisition. They maybe thought that there was more to it that they could help with and expand the market share. Looks like it's been quite a disappointment. Okay, moving on. I found this one quite interesting. Braemar Hotels and Resorts announced initiation of a sale process. So this is a hotel REIT, as you can imagine, and they made a decision that after looking at all the options, they decided to sell the company. You know, it's pretty bad when that's your best solution is to sell the company, but it is what it is. So looking at it, they have a luxury hotel property. They have some of the highest revenue per available room in the market. They have things like the Ritz-Carlton, Four Seasons, Park Hyatt, Marriott's, Hilton's, very luxury properties. But they're deciding to put themselves up for sale and looking for a buyer. Hard to know who will take it. It might be private equity. It might be another real estate investment company. Time will tell. But if you look at the share price, it kind of makes sense that they're looking to sell it. So over the last 5 years, they've only gained a little bit under 9% in share price. So if you're a management team and that's your results over the last 5 years, especially with the way the rest of the market was, maybe it is time to try a new direction, which in this case looks like they're selling the company. So I feel bad for any shareholders out there, but hopefully whatever the sale price is, it'll be a bump up from what it is today. And so you get a little bit of your money back, but overall hasn't been a great thing for Braemar. Okay, moving on. This is meme stock mania. Kohl's hits again. It says Kohl's narrows outlook after Q2 results top expectations. Now, to be honest, I'm not the demographic for this particular company. I don't shop at Kohl's. I don't need a lot of clothes. So it doesn't make a lot of sense to me. Honestly, I don't even know how it still exists. But that being said, they did they did raise their outlook and they beat the expectations, however low they might be. That being said, they are guiding for sales to fall 5 to 6% this year. And so I don't know how stock is shooting up when the sales are going down, but it is what it is. Welcome to meme stocks. All right, so it looks like the FactSet, which is one of my favorite companies, I do own that company, expects full year sales of $14.66 billion, down 4.7% from last year, and same store sales are going to be projected to decline 4.6%. All that said, you wouldn't know it looking at the share price today. It's shooting up almost 17% as of the time of the recording. So maybe someone knows something I don't know, or maybe it's just meme stock mania, but this is one that I personally would stay away from. All right, and the hits keep on coming for UnitedHealth Group. I said on Twitter and some other places, in my opinion, United Healthcare is uninvestable. Where there's smoke, there's fire, and it looks like there's even more smoke. So it says the Department of Justice expands their probe into UnitedHealth's prescription management services this time. And so if you remember, UnitedHealthcare was already under an investigation under the DOJ for their Medicare business, which is a government program for medical costs for people over 65. But in addition to that, they're also now investigating pharmacy benefit manager Optum Rx. So again, if there's problem in one part of the company and now there's problem in another part of the company, it seems like this is probably a widespread issue. Now, there aren't any official results from the investigation. They're not saying that UnitedHealth did anything wrong, but the way I look at it is there's so many options out there in the community to invest in. This is your real money. Why are you going to invest in a company that continues to have trouble with the regulators and their business model? In addition to that, their goal is to reimburse their clients as little as possible, but their clients are expecting and wanting them to cover their medical expenses. So you're at odds between your client and the company. That leads to a very unstable environment where your customers aren't even happy with the company. So why would you be an investor as well? I know United Healthcare is a darling of the dividend community. It's in the Dow. It's a very well-known name. But again, this is your real money. You should think about where you're investing in it. Looking at the share price, it kind of reinforces my point. It's down almost 40% this year alone when the market is reaching all-time highs. So again, why would you invest your money in a struggling company like this that potentially has major government oversight implications when you can invest in any other things that make a lot more sense and are a lot more stable? You got to talk about Cracker Barrel. Everyone's talking about this silly logo thing. They changed the logo. They got lots of pushback. Now they're changing it again. Like, if you were the management of this company or the marketing team, you need to leave. This is ridiculous. Like, you didn't do any kind of market research. You didn't do any kind of analysis to think that the public would not like this new marketing slogan. So they're back to having their original logo again. So it's the Cracker Barrel name with the old man next to the barrel. They're going to keep it the way it was after the major backlash from the community. So again, this is something that I would not invest in personally. It's done horrible over the last 5 years. It's not a quality company. So luckily, for those who are invested in it, you got a little bump back today. But overall, this is something I would avoid. If the management can't even get this right, how are they going to be running the business? All right, last up, and of course, I can't talk about the specific numbers because I'm recording this before the Nvidia earnings later this evening. But Nvidia will be reporting their earnings after the market closed today. So That will more than likely drive the market over the next couple of days, depending on if Nvidia does well or not so well, and especially their forward guidance. I think most analysts are expecting them to beat their numbers for this quarter, but what's really going to move the market and move the stock is their guidance going forward. Are these big hyperscalers like Meta really purchasing more and more Nvidia chips, or is there going to be a slowdown? So look forward to that this afternoon. Any kind of updates I will include in my video tomorrow. Most people don't consider Nvidia a dividend stock, but technically they do pay a small dividend, so I wanted to include it here today. All right, that's it for today. Thank you so much. Make sure you click like, subscribe if you haven't. Really appreciate your support. Have a good one. Thanks for watching. While you're here, check out this next video to learn more about dividends, income investing, and option selling. And while you're here, make sure you subscribe. Click the like button. It really does help. Thanks.